Alright, real estate investors. Today we're unlocking the secrets of apartment investment structures. Whether you're new to the game or a seasoned pro, choosing the right investment vehicle is crucial. First up, the LLC for syndication. An LLC is perfect for pooling funds from multiple investors. It offers liability protection and flexibility in profit sharing. This means everyone can join in, no matter their investment level. Now, if you're thinking of a partnership with just a few co-investors, a general or limited partnership might be your best bet. In a limited partnership, the sponsor is the general partner managing the project, and the investors are limited partners providing the capital. Okay, let's talk equity distribution and profit sharing. Preferred returns are a great way to attract investors. For instance, offering a 7% annual preferred return means investors get this before any profit sharing. After that, you can split profits, say 70% to investors and 30% to the sponsor. Equity ownership is another key point. Assign ownership based on contributions. So if an investor puts in 10% of the total capital, they get 10% equity ownership and share in the appreciation and exit proceeds. Investor protections are a must. Draft a clear operating agreement detailing roles, decision-making, profit sharing, and exit provisions. This reduces conflicts and ensures everyone's on the same page. Include exit provisions for potential early exits or buyouts. Transparency is also crucial. Provide regular updates, financial summaries, and project reports to build trust. Now, let's align interests. Offer carried interest to sponsors after the preferred return is achieved. This rewards them for project success. Also, structure deals to allow investors to benefit from property appreciation. Finally, a few extra tips. Engage legal counsel to ensure compliance and draft agreements. Align your structure with investor goals by seeking their feedback. And simplify complex terms, especially for those new to real estate investing. In summary, a well-structured investment vehicle can pool capital, align interest, and establish clear terms. By doing so, you can attract high-net-worth individuals, family offices, and other partners, scaling your investments and achieving long-term success in apartment investing. Thanks for watching, and happy investing.